Welcome to another real estate industry update. I'm your host, Daniel Roccanti, and today we have the pleasure of hosting Zach Eberson, with a commercial insurance advisor with Brown & Brown Insurance. Zach, we're so glad to have you here today. Why don't you tell everyone a little bit about yourself and provide an overall of your experience in the insurance industry?
Sure. Daniel, thanks so much for having me. So I started this journey, I can't believe it, 11 years ago. Originally, if you can hear it in my voice, originally from South Jersey. And then the wife and the family and I moved down here to Florida about 2 years ago. But I've been in the insurance industry for 11 years now, specializing in construction, manufacturing, and large commercial values. And it's been an ever-changing market, but it's a fun industry to be in.
Well, we're glad to have you here. Like I said, Zach, he's had, experience kind of all over New Jersey, now here in Florida, but he's got over a decade of experience in the insurance industry. And anytime you have that much experience, you just got to have great insight. I think everyone is just knowing insurance has been very challenging currently and probably over the last couple of years, just with everything going on, especially here in the state of Florida. It's been a nationwide problem, but I feel like in Florida, it's been elevated a little bit more. Can you kind of provide to us like an update on the current state of the commercial insurance market?
Sure. So I'll start with this. It's not as bad as people are used to. I know it's funny when people sit on the beach, they love to talk about insurance. I don't know what it is. The sand between their toes, I don't know what, but it's like whispered down the lane and everyone, has a horror story to share with their friends about insurance. But going back to 2021, 22, 23, it was very, very tough. It was a very hard market for a number of reasons. But as we go into 2024, we're starting to see things level out. We're starting to see maybe slight increases, but nothing compared to 22, 23. We're starting to see markets come back into Florida. And then the markets that remained in the state, they're now improving their terms. They're increasing their insurable values. So things as of right now, as the date of this recording, things are looking up for the state of Florida in terms of the insurance industry.
That's really good to hear. I mean, I know just from even a personal side, I mean, everyone's insurance premiums have gone up significantly. And then, of course, on the commercial side, it's completely different. And like I was saying, in Florida, it's a little bit unique. We got so much coastline. Anytime you get closer to the water, it's always a little bit more difficult to insure higher premiums. So we like to hear that. There's been a lot of just like legislative reform, I would say, over the last couple of years, especially here in Florida, but I know around the whole nation. Can you kind of talk a little bit more about like how does that affect insurance? And is there anything else our government or elected officials can be doing to kind of help out this insurance market?
Sure. So here's a fun stat that really rocks people when I share it with them. So last year there were 27 nationwide, not the carrier, but throughout the United States. There were $27 billion disasters from weather, okay? Florida had 2 of those, which is kind of crazy. People say, when I ask that question, people say, I don't know, we had about 10, 15. No, Florida only accounted for 2 out of those 27. When you think about the freezing in Houston, when you think about the floods in Houston, when you think about the twisters in the Midwest, the forest fires out in the Pacific Northwest, the blizzards up in the North and the Northeast, what people have to wrap their head around is the same carriers that rate property in Florida, they rate property not only throughout the rest of the United States, but throughout the globe, okay? In one form or another, they're insuring literally the world. But for some reason, and I think a lot of it comes down to, social engineering, where people think, oh, Florida, we are on the coast and, hurricanes, but people think that bad things don't happen anywhere else in the country. It's for some reason, Florida is like the redheaded stepchild where everyone thinks everything bad in the world happens here. So that's why, like, it kind of irks me when I hear other people in the industry saying, oh, well, Florida, how's all these big claims? Well, has anyone paid attention to the twisters in the Midwest right now? Yeah, it's kind of a big deal. Where we were really getting spanked, though, was in the courts. Frivolous lawsuits, just truncated a litigation where claims were just completely blown out of proportion, and these carriers were having to pay, these huge fees that really shouldn't have been paid out. So here, on top of a hard market, on top of yes, claims, on top of increased litigation, that's what caused this perfect storm. And going back to 2022, Governor DeSantis, he signed a Senate bill that kind of helped out, that did help out the property market in Florida. He took away assignment of benefits. He took away one-way lawyer fees. So it's really helping out the homeowners. Now, I think I gave you the analogy. It's kind of like a locomotive where in the beginning, the first couple rotations are very, very slow. But as the rotations start to speed up, now the train's off and running. That's where we're at right now. So he signed the Senate bill in 2022. We saw it take effect in 2023. Here we are going into midway through 2023, heading into 2024, and you're already starting to see that things are getting better. And you're already kind of starting to see that people are starting to shift their focus in the courts from property market to auto market or liability or umbrella, because they kind of know that, the party's over where it comes to property. Let's focus somewhere else. And Georgia is right in the crosshairs right now. Georgia is one of the most litigious states and growing in the entire nation right now. So, knock on wood that we have an easy storm season coming up. But what's happening in Tallahassee is really helping out the homeowners throughout the state.
That's good to hear. I mean, you kind of gave us a market update that we're on the rise here on the insurance market. But, it's kind of like you were saying. I mean, like when the legislator, when they do reform, it's not instant. It takes time. I mean, insurance isn't unique in this aspect. All legislation, takes time. But I feel like insurance, it's even more. It takes a little bit more time for the impact to happen, for it to kind of play out. One of the issues I know we've had is, we have a bad hurricane season, something like that, and then a bunch of providers, they leave the state, that makes it tough. Are you seeing more providers coming back now? Where do we look like in our state right now?
So what people, I know this, they don't like to hear this. The general public doesn't like to hear what I'm about to tell you. But hopefully this helps this channel and pushes the needle. But insurance is a for-profit industry. These carriers want to make a profit. Okay, it's not a 501c3 where we're just benevolent. We're trying to help people out. So at the very end of the day, yes, these carriers are trying to make money. Okay, and guess what? That's okay. But maybe this is the capitalist in me. Let the market dictate who's going to win and who's going to lose. So I always use the metaphor that these carriers are kind of like sandpipers. There's little birds on the beach. I grew up on the beach. I'm here in Florida by the beach. So when a big wave comes, all the sandpipers run away. There might be a couple that stay. And then the wave goes away, and then all the sandpipers come back. That's the exact same thing with these insurance carriers, Daniel, where when things got tough, when limits were going up and rates were going up and claims were coming, yes, there were those sandpipers that left the state. Well, now going back to 2023, when they started seeing that their competitors were bringing in a profit in the Florida property market, they said, well, let's get back into this state and we're going to increase our threshold. Maybe we were capped at 5 million per property. Now it's going to be 20 million. Okay. And they want it to become more competitive in this market. Timely, let's think about GameStop. No one was buying GameStop. And then they saw a couple people make a killing. Well, now I'm going to buy GameStop. It's the exact same thing. We can't help ourselves. So to answer your question, yes, we are seeing more markets on a weekly, monthly basis. I'm looking over my other screen. We're getting emails on a bi-weekly basis that here's a new market. Here's a new market. Hey, we're writing condos now. Hey, so they are slowly trickling back into the state, which is great for the consumer because competition breeds success.
I agree. I mean, there's the more competition we can have, it's just better for the consumer. I mean, it's like you're saying. I mean, insurance is still a for-profit industry. They're still out there to make a profit. So if they're losing their shirts, they're going to leave or go somewhere else. But the moment that they can start making profits again, and then it's like you said, we got capitalism here in America. So the more insurance companies we have, that just means better pricings for us. So I'm glad people are coming back in. Also glad you really brought up GameStop. I don't know if you saw, but on social media recently, I saw that he's like a billionaire now or something. That GameStop guy. I forgot about this guy. I watched the movie, like the blockbuster movie about it. And then, and they were just kind of like, yeah, it hasn't been heard of. And I didn't think anything about it. And all of a sudden he pops up on my social media. He's a billionaire. And I was like, this guy still has GameStop. I was like, wow. I was like, all right, good for you, man. Well, let's transition a little bit back to Brown & Brown here. So obviously your focus is mostly on just commercial insurance. There's obviously a whole housing thing. That's a different thing. So we want to focus more on commercial here. So what does kind of Brown & Brown offer on the commercial insurance side, especially dedicated more to like real estate professionals?
So the biggest thing for our partners that are in real estate is, deliver bad news quickly. Okay. And I do talks all the time. I'm invited into brokerages to help educate them on the insurance market. And I think the worst thing that specifically realtors can do is say, this is what the previous owner of the property was paying for insurance. And let's just factor that into your business model. They were paying X, so put that into your business model. That is probably the most dangerous thing you can do as a real estate professional. So to give you an example, we had an investor all the way from New York, and of course, everything was virtual. Maybe they did have boots on the ground, but the individual I was dealing with was not down here. And they said, okay, well, we were told that they were paying this for this large property. Well, it was this times 2 what we were coming back with, because the previous owner did not have wind coverage on the property. The previous owner did not have the roof covered. The previous owner did not insure their property up to 100% replacement cost, all of which that I just named were requirements by the lender. Okay, so fortunately, they were able to move some numbers around and the deal went through. But that's a classic example of, one size does not fit all, where, I would just say, if I were a real estate professional, I would just defer to an insurance professional. Say, hey, here's what I know about the market. Here's what I know from talking to Zach at Brown & Brown, and then just pass the baton over to us. Because the property market in Florida, and I would say nationwide, is forever changing. Terms are changing, endorsements are changing, deductibles are changing, appetites are changing. So what you promised someone 6 months ago might not ring true today.
No, that's a good story. I think a lot of people don't realize that, high insurance prices, some people are going to be taking shortcuts to reduce that price. And so, like you're saying, if you're just kind of going off, hey, that's what the other owner, if you're buying obviously new commercial real estate here, you needed to make sure what's the actual coverage. And is this the coverage you want, or do you want more coverage than that? Like not having your roof insured, that's a pretty big deal. I don't know how they were okay with that, but okay. So you have kind of provided an example for us already, but can you provide us any more like challenges you've encountered when insuring commercial real estate properties and how you addressed them?
Sure. So I truly believe this, that my job is to educate and advise my client. Okay. Just like a financial advisor, they don't have the client's money and just buy everything willy-nilly. They have to present their position and why they think this is the best solution for the client. And then at the end of the day, the client makes the decision what they want to do with their money. Insurance is exactly the same. It is my job to present the risks, to present the exposures, what I think my solutions are. And then at the very end of the day, the insured says, yes, let's go this way, or no, let's go this way. Okay. And if I'm really firm on a position, I'll let them know that. But at the very end of the day, it's their decision. And kind of like a rule of thumb is, if you can sleep soundly at night, then we're in a good spot. But if you wake up in the middle of the night in a panic, if you're wondering if you're insured properly or if your limits are high enough, or do I need cyber, do I don't need cyber? Well, the answer is yes. If you're waking up thinking about insurance, something is wrong. But what we do, especially with larger property values, is, we do our needs analysis, we run a report, we use our analytics and our forecasting. Insurance, we use past experiences to predict the future. So there's a lot of, we utilize AI integration into everything. So it's not just throwing stuff at the wall. What do you think? You think it's 3.5 million, 4 million? I don't know. This is not the industry to be guessing, So what we do, or what my team and I here at Brown & Brown, what we do is we present options to the insured. I'll give you another story. I have a client that has 7 buildings on one plot of land, I think to the tune of 42 million in total insurable value. And they were hurting for capital. And they said, the insurance just keeps going up, keeps going up, keeps going up. And I said, all right, well, here's an approach I'm sure no one's presented to you. What if we self-insure a couple of these buildings? Zero coverage. Liability, yes, will stay on there. But we ran the numbers, our predictive modeling, based on past experiences and data that we were able to uncover, and presented this option to the board, and they were very, very comfortable taking our recommendations. Where they were self-insuring, I think 2 or 3 of the buildings that were low to the ground, cinder block. Worst case scenario, if it goes up in flames, that it wouldn't be that dire of a situation for this client. They could easily rebuild in, a couple months. But we were able to move some values around to the properties or the buildings that were, much more, much more needed than the other buildings. So at the end of the day, client felt good. They felt secure in the program, and it was a win-win all the way around. But again, it's not a one-size-fits-all. It's not, hey, this is what worked for this client, so it's going to work for you. Let's work together. Let's have a conversation. I'm going to present you with tools and data and information, and together we can make an educated decision.
I think that's important for people to understand is insurance, it's different. I mean, for everyone, like the building you have, the business you have, all of that is completely unique to your situation. And you're not going to get the same insurance someone else did, just because it's like, what's your building? When was it built? What shape is it in? How old is everything? And then I'm just touching the surface. I know you can go into way more details on here. And I think people think they forget that. And they're just like, it's a building, just insure it, And so, and then obviously with the challenges we had the last couple of years, there's been significant rises in premiums. And this is on everyone's mind. I mean, with inflation, the rise of costs everywhere, a lot of real estate professionals they're kind of hurting because the profits are down, operating costs are up. And so when you're squeezing as little profit as you can, you're like, where's the big fish? And I'm just in there like looking at their commercial insurance and like, man, this has doubled in the last couple of years. So I just know talking to my clients, it's always an issue that people are talking about. So like what advice can you provide to these real estate owners that they're looking at ways to minimize their insurance premiums? Sometimes they get the renewal and it's like a month before you need to renew it. And it's like, at that point, it's probably too late. Like, what advice can you give these people that are try to be proactive about reducing their insurance premiums?
So I would say this, it's funny. You talk to everyone, insurance is going up, insurance is going up, insurance is going up. It's going nothing but up. Well, then why is it that we're saving clients money? Right. And anyone can slash coverage. Anybody can lower limits and save you premium that way. That's not really saving premium. That's just lowering your insurable value. Okay. Let's look at rate. Let's not look at premium. So those are two different things. I would have an honest conversation with their broker. I repeat, I do not advise to shop every single year. I will not work with someone that does that because at the very end of the day, when it's AI, predictive modeling, tools that we use for quoting, at the very end of the day, when you get to these large property values, it is a human being generating these quotes. It is an underwriter with their team and their actuarials that are getting together and they're quoting this business. And it takes a lot of time. It takes weeks or even months to get a quote for one property. If you're an underwriter and you invested all this time, all your team's times, all of your overhead, and you presented a quote and you didn't get it, well, the next year when I come back, I'm not going to, bend over backwards for you this year. So I do not suggest quoting every single year. That does not benefit you as the client. What I would say is if you haven't explored other options in probably 3 or 4 years, maybe it's a good time to at least hear someone else's marketing ideas. Okay. What will Brown and Brown do? What is your strategy as we approach renewals? What markets do you have access to? What does your analytics and your predictive modeling present to us? Information is key right now. It is at a premium. And I will say that renewals are very, very tough to get out, 2 weeks, 3 weeks in advance. We've had examples here where it's 1 or 2 days before renewal and we don't have a quote yet. And that's because the underwriter in that market couldn't get the limits that we were asking for. And the reinsurers weren't getting, it's a trickle down. So the reinsurers couldn't get the limits. That means the carriers couldn't get the limit, which means I couldn't get my quote, which means I couldn't present to the insured. But if you've been tuning in to what we said earlier, it is getting better. And for us, if let's say you're a 1/1 renewal, we're meeting, and when I mean 1/1, I mean January 1st. So it's a January 1st renewal. We're meeting in March of that year to talk about renewal 9 months in the future. We're talking about budgeting. We're talking about, hey, I would budget for a 75% increase this year. I love this. I've been using this for years. People don't mind bad news. They hate surprises. So if I came into you 9 months ahead of renewal and said, we're looking down the barrel of a 75 to 100% increase in premium, and here's why, and here's what we're going to try and do over the next 9 months. If I come in with a 50% increase, you're thrilled. You said, Zach, you were telling us it's going to be 75% to 100%, and you came in at 50%. We're popping bottles when I come in with a 50% increase. Now, if I come in 2 days before renewal and say it's going up 50%, I'm probably going to lose my job.
That's So it's really interesting because you're basically same result. The only difference is leading up to the result, right? Who was surprised and who wasn't? Who was expecting it and who isn't? Because no matter what you do, if the entire market goes up 50%, it's going to go up 50%. There's only so much anyone has power of doing. Unless you want to cut insurance coverage, which we've already talked about, probably not the best strategy. Maybe works for some people, but that's because you have the ability to self-insure elsewhere. Okay, that's usually how that works. But for most of us, we need to fully insure our buildings because in the case of, some event and we lose the whole building, you're going to be at a loss if you didn't cover your full building. Now you're not going to be able to rebuild or move on or get the recover your value back if you're underinsured. And it's like, was that worth it to save a little bit of premiums? Probably most likely not. Okay. But I think that's the big thing is if you want to be proactive, like you got to get out in front of this. Like you were saying, if it's a, first of the year renewal, like we should be talking in March. Okay. So that's 9 months out. But how many people are talking to you in March? Like everyone starts showing up in November, December, and it's like you're too late. Now at that point, we're working on the next year. That's the best we can do. So if your insurance premiums is an issue to you, like you are a real estate professional, you're looking at your investment, the strip mall or something like that, and you're just like, man, like costs are up. What costs have been up the most? What can I do? And you're noticing, okay, my insurance has been up significantly. It's like, all right, go reach out to your broker as soon as possible, get in front of it, see what you can start doing. See, start assessing because like no one's situation is perfect here and 100% the same. So it's like, they got to assess the whole building. What can you be doing? Is there things to address so that when the renewal comes around, you can be like, yep, now the actuaries are giving you better rates here. There's a lot you can be doing here. And you mentioned this earlier, and I want to kind of expand on this because you get a lot of bad advice about this. Stop shopping every year. It's the worst thing you can actually do. You see it so much over social media. Maybe this is people with their individual auto. It's even a bad idea, but it gets put people's mind like, well, if you're not shopping every year, you're paying too much. And it's like switching jobs every year. Like you can do it a little bit. But eventually, someone's gonna look at the resume and be like, "Hey, this person moves on every year. I'm not gonna give them a good rate. They're just gonna leave in 1 year." And like I said, it's a for-profit industry. No one's making money if they know you're just gonna leave in 1 year. That's
exactly. And this is real life, Daniel. This is real life examples where we have had underwriters. Let's say we get a new project and we present it to an underwriter. They have said, I took a swing at this with the last broker and the broker before that. I'm not giving a quote this year because they passed on us 2 years ago. They passed on us 3 years ago. We did a lot of work. We improved their program and they still passed on us. We're not going to present a quote. And, I did say that markets are coming back to Florida, but there's not as many as I would like right now. So let's say that there is maybe 5 or 6 markets for one particular program. Well, if you piss off 3 or 4 of those underwriters, there's not that many left. Okay. So homer take here, I wouldn't even shop brokers every year. Okay. I would entertain what other brokers want to say. What would be I would interview them first. What is your marketing strategy? What can your company do for us? But yeah, just to drive it home, it is not in the client's best interest to be switching or even shopping the market each and every year.
And that's important for people to know. If you start burning every bridge you have, eventually there's going to be none left. And then you're going to be stuck with no options except paying, extreme premiums on government-backed insurance, corporations and things like that. So just be aware of that. I see people talk, like I said, sometimes bad advices on social media, and just make sure, work with your current broker or work with your current insurance company if you can. Obviously, if they're not willing to work with you, then maybe start shopping things around. But just be wary about it. If you're changing something every year, it's not a good look for you. It's not a good business model for anyone else.
I would even say this too. Be weary of these buzzwords being thrown out. If you were my agent, Daniel, I said, Daniel, the insurance keeps going up. Why? And you say, well, claims, the weather, we're in Florida, inflation, inflation's going up. Everything's going up, right? Price of eggs. Have you bought eggs? Okay. That's like at a 10,000 foot level. Okay. I want to know how inflation impacts the insurance industry. I want to know why when rates go up, bonds go down, and these carriers wake up the next morning with a loss, with no disasters or no claims. I want to know how social engineering is impacting the market. So if you're out there and you hear these things like, well, inflation's up and cost is up. We're in Florida. I just said earlier in this video, $27 billion weather disasters in the United States, 2 in Florida. Out of those 2, 1 wasn't even a storm. It was flooding. So be careful if someone's just throwing out these drive-by excuses like inflation, weather, hard market. Okay, why? How? Show me the whys behind the whats. And I think here at our team, I know for a fact, our team here at Brown & Brown, we have that information.
That's good. That's good to hear, Zach. So can you share any maybe success stories or notable achievements from your career? How you maybe helped out one of your clients with insurance?
Oh my God. I mean, too many to count, honestly, because, that's why I love what we do is each file that we have, each insured that we work with, there's an issue. It's a puzzle. And it's much more than, hey, Daniel, look, you're paying, there's $1 million limit here, $1 million limit here, 2 million here, 2 million here. And look, I'm cheaper. Ergo, I'm better, right? I was able to save you X amount of dollars, sign here, I'm your new agent. You would be shocked at how few times I've saved a new client money and they were thanking me. They said, thank you that we're paying more for insurance. How often does that happen? Right? But we come in and we say, hey, you're not covered for this or this or this or this. We did our executive summary. We've tested the resilience of your program, and it did not test well. So I think what we've done here is we've completely reverse engineered the whole shopping process where every business owner, every real estate owner every real estate owner, they get a phone call. Hey, I'd love to come in and share my ideas. And they get this phone call 2-3 months out, and then they test the market and we saved a little bit of money. I'll tell your viewers this right now. I am not interested in saving you money. I am interested in controlling your risk portfolio. I'm interested in asset management. And then, yes, at the very end of the day, at the last page of the proposal, if you see that I saved you premium, then that's just gravy. And there's a reason why I leave that premium page to the very end. Number one, because they're forced to listen to the entire presentation. But I truly believe that the premium is the least of our concerns right now. So if I'm able to improve your program, give you policies that you've never had before, if I'm able to find you solutions to problems that you never knew existed, and then we flip to the last page and I have saved you 10, 15, 20%, then everybody wins.
Yeah, I like what you're saying there. I think that's where a lot of people don't always understand. Like, that's the difference you can make. It's not always like, did I save you money? Like, yeah, we all want to get saved money. but it shouldn't be your primary. Your primary should be like, are you actually covered inside and out? Oh, I got property insurance. Well, it's like, well, there's so much more insurance than just property insurance, right? Is my business fully covered from every aspect? Do you have somebody that is looking into you saying, hey, here's your risk? Because like you were talking about, it's like asset and risk management. That's what you're doing here. And if you're doing your job correctly, and your job is to come in and say, hey, you're underinsured in areas, and yes, it's going to cost more to get insurance for this. I mean, that's a good broker. If the broker's just trying to save everyone on price, I mean, yeah, like you said, I can just start slashing coverage left and right, and I could save everyone money. But the reality is, it's what's best for you and your firm. Where's the risk at? And that's what a good commercial insurance advisor should be doing, is they're assessing your situation and saying, here is your needs, your unique needs to your building, to your business. And sometimes I have to be the bad guy and say, hey, you're underinsured. This is what you need to do. And I think that is how a commercial insurance advisor, this is what makes them different. This is how they stay competitive and differentiate them from other agents. It's like, are they just trying to save you some money, or are they trying to come in and provide an actual value for your properties and your businesses, which, like you said, might not always be a price save. I mean, it might be like you said, you turn that last page and it might actually be it. Or it might be like, hey, I upped your coverage significantly and your premium only went up a little bit. That happens a lot. So from a very high end, it looks like, you didn't save me any money. But reality is, like, you doubled your coverage and the premium didn't double. So it's like, I did save you a bunch of money, but I also got you so much more insurance. So now your business doesn't have any holes in it.
Right. And, I always say I'm like king of the quips here at the office. Maybe it's the dad in me, but I do say that the worst claim is the one you think you're covered for. So what would you want me to do? You want me to come in and save you $10,000 on your auto? Fine, I can do that. But I think what's worse than, or I should say better, what's better than saving you $10,000 on your auto renewal this year is keeping you out of court for a $2 million lawsuit that you thought you were covered for.
Yeah. I mean, that's what most insurance is. It's big events, extraordinary events that could have a huge loss for you if you're not adequately covered. So that's something like on properties, hurricane comes in, it could potentially knock your building down. And it's like, boom, I have a $5 million building and it knocks it down and I am not fully covered. My insurance is only covering $1 million of it. That's like, well, where's the other $4 million? It's like, well, now you, not only do you lose your building, but now you're out. Whatever that is, that's your investment, it's not your business, that's your income source, like whatever that is, like you're out. You're not getting any more future income from that. And then you're just going to have a huge headache. And obviously, if you got business owners or investors, that's an even worse scenario. You do not want to go down that road. We're wrapping up here, Zach. Is there any other advice you can just give to any, especially if people in the real estate world, any advice on the insurance side before we wrap up here?
Just know that better days are upon us. And just like anything, Daniel, there's ebbs and flows. Everyone remembers 2008. Yeah, well, here we are. The stock market's never been higher. Okay, we have these ebbs and flows, these ups and downs. In the Florida property market, 2023 was the first year in 6 years that the property market saw a profit. Okay, so if you want to think about it, if you invested in a stock, a considerable amount of money, and you lost, and then you invested even more money into that stock, and it lost again, and it lost 2, 3, 4, 5 years, 6 years in a row, you just keep losing money. Then you keep reinvesting into this same stock, and people are calling you crazy. That is what the insurance industry just experienced and what we're coming out of. And like it or not, those high rates that you and I have been paying have paid off, where the market is starting to see profits. Competition is coming in. So now you can't have these high increases because they're going to price themselves out of the market. So it's going to be much more competitive. Tallahassee's helping us out. The Senate floor is helping us out. And going back to what we said earlier with that locomotive, it's a slow start, but you're going to see that things are going to get better in the insurance market in Florida. Let's just keep our fingers crossed during hurricane season.
I love it, Zach. Better days ahead. But yes, definitely fingers crossed on the hurricane season, because I know they came out and already predicted a bad hurricane season, which is never good to hear. Hopefully they're wrong.
When have they never predicted a bad hurricane season? When was the last time they said, hey, that's looking good, blue skies and rainbows?
If that's the case, they say nothing. So they either say bad things or they say nothing. I've lived in Florida my whole life. I've been through a lot of hurricanes, and most of them I can't even remember because it just rained for a day. That's how it was. There was no real damage or anything. But they do love to doom and gloom it when there is a bad one or a potential bad one. So it gets definitely blown up a little bit in the media on hurricanes. But thanks, Zach, for coming in today, and really appreciated all the value you were added, and love the optimism. I think I agree. I think insurance is going to keep getting better in the future. And so for anyone that's, this has been a big challenge for them, it's going to be better. And we're going to have better insurance, better pricing as more providers come back into the state of Florida. Thank you for tuning in to today's episode. We hope you found our discussion insightful and valuable. If you enjoyed this episode, please subscribe as we produce frequent videos related to real estate. Thanks again for Zach for joining us. I recommend reaching out to Zach and Brown & Brown Insurance for any of your commercial insurance needs. His contact information will be included in the information section. Join us next time for more expert insight and tax strategies to help you maximize your real estate investments. Till then, stay informed, stay proactive, and happy investing.
To learn more about James Moore & Company's real estate accounting and business solutions, go to jmco.com. And don't forget to subscribe to our Real Estate Industry Update series to receive updates when new videos are released. If you'd like to be a guest, or if there's a topic you'd like to see covered on a future episode, contact us through our website or email us at info@jmco.com. You can also follow us on social media for more news as the landscape of real estate continues to rapidly evolve.